Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Just wanted to do a quick video update and just be done with this. Let's talk about today. Today was just pick off a perceived high and take advantage of it and move on. So the goal of step one is to get to step two. There's no uh, ifs, ands, and buts about that question. You just get the $2,000 any which way you can and just make it happen. So step one is done for me. Today I think was day 12. Yeah, as far as trading days go, is day 12 for me. And you can see that I passed step one again, and I'll be moving to step two next week sometime, probably trade Monday or Tuesday of next week, or Sunday night, something like that. Very simple. I went over this video. Go look at my video content. I think it was a video maybe 2 or 3 times how to pick off a high. It's another GAN signal. It's all I did was hopefully by now you should know how I look at things and how I try to pick the high off. Doesn't mean it'll always work, but there you have this little channel right here, right? You got your GAN signal, and you have your 4th time through, right? That's all it was, is a GAN 4th time through. And I was looking at volume. So here's your volume down here, volume going this way, and then you see your offsetting volume coming right there. So great exit point on the offsetting volumes. This bar and this bar kind of equal each other. That most likely means the short side of the trade, at least at this point in time, is over. And most likely we're going to see new highs for the rest of the day. I don't know. No one knows. Suez Canal, you name it. I mean, got a tanker stuck in there. You've got Biden's policies that have negatively impacted the gas prices at the pump. I mean, all the other bullshit going on. Regardless of all the bullshit that's going on in the markets and the economy and whatnot, some things stay true. Technical signals, right? And just call it tech. Technical signals will stay true. That's an E. That's a C. It doesn't look like a C, but that's a C. Your technical signals will stay true if you follow them more times than not. It's the same. It's the same broken record, right? Here's your GAN 4th time through. Here's your MACD signal. Now that actually broke through there now, so this shortened signals over. But this is, this is Williams percent R here, percent R. And here's your MACD signal. So I was actually looking at MACD. When this one made its high right there, you could see divergence between this high, and this high. So I was willing to take it on. I tried it, attempted it here, which that was an ill-advised trade. I was down, I think. I got out at minus 7 ticks, I believe, on the first one. I added 2 on this one, came down, got out at break even on that one, and then you can see me buying in here, and then I took it down here and got out. So there's my winning trade to get to the 32,000 right there. So I sold here and I sold at the top. So I was looking at this high holding, and then I was willing to take the difference between the two there, right there, and looking at the MACD. Once it did form that high, I wasn't scared to go up there and attempt it again off of this mark right there. So long story short, I was off by 1 last time. If you look back at my videos, I was off on catching it by 1. So this one right here is what I call the fake out signal. This was a fake out coming up through here. There was a minor fake out, this one, that's why I like that one. And this was a bigger fake out coming up here just to take out the highs, see what's up here. So they tested it, so it's called a test. VSA would call it a volume spread analysis. Go back and look at Tom Williams stuff. He would tell you that this is TW, not to be Tom Williams with his VSA. They're called TradeCraze now, but this would be a test of the highs right here. So they went and tested the highs to see what was there, and then you could trade it down. Now obviously the market's moving up. So they went up there to look at it. They saw that, hey, there's really nothing up there. They brought it back down, bought back in again, and now they're driving it back probably to find out what's around that 6100 level, maybe up the R2 line too as well. R2 today is located at, where is R2? R2 is at 6230. That's pretty far away actually, come think of it. Um, it's way out there. So you got some levels that they can play into. This is 6170, 6150 level. That can easily be run today. That was some support and resistance earlier in the week. You can see the R2 level. So that's kind of the thought process that I've got right here. So as far as my signals, I'm done. You know, the goal of step one is to move to step two. I was able to accomplish that today after it's like 12 days of trading. Let me get my, hold on a second. Let me pause the video and bring up my TopStep account. All right, so here's my TopStep account. Get the screen draw tool out. You know that I look at days complete. So it's 12 at a winning percentage of 100%. That doesn't happen very often. But I was just taking, you can see my equity curve. I just taking gains, moving up, taking little gains, and then you can see I had a $600 winner today to be able to pull out. So this equity curve went here. That was my goal. Actually, this day and this day trading was to try to just reach the 32,000 mark and move on. I didn't have any losing days. Average winning day, you can see that I just was taking a little bit out of the market. Yesterday's high, that was my high, 31,479.40. That was my current account, and best day was 261.50. And then today I got a plus 60 on my trades to pull out the 32,000 mark. So worst day, I guess I was up 48.90. So it took a little bit of a. I'm very risk averse to start with. I don't. I am really. I never would tell you to trade the step two, and step one basically is just maximize your leverage as best you can and take advantage of the ability to not worry about the 50 tick stop loss. The way it works right now is you can go run past that 50 and you can make a losing day into a winning day most of the times. Be willing to get out at break even a lot of days that you're losing, right? So if you're in a loser as far as a losing position goes, be willing to get out at break even if you decide to add a contract into your account. Adding can be dangerous, but if you're willing to get out at break even when you add a contract, there's usually a lot of opportunity to at least get back out at break even and move on to the next trading day. So keep that in mind. Not every day is going to be a winning day. A lot of days are just going to be break even, and a lot of days you're just treading water trying to get back to break even so that you can just call it and work for the next trading day. Occasionally you find those nice winning days like today, just taking advantage of a Gann signal, a short inside a long position. So you can see it did end up going higher. But there's no volume associated with this. So there's really, the interest now is kind of dried up. Does it go down? Does it go up? I don't know. I would tell you that the market probably resistance level. I told you where I thought resistance will kind of come in the market right here. Today, this is where I believe resistance will show up if it wants to show up today. Heavy resistance, let me put it that way, between 61.70, 61.50. If we go back and look at longer term time frames, if we bring over the hourly charts, you can kind of look at where those levels are. So, no, this is a day chart. We need to go to the hourly. So you're looking at the highs up to here. So it's basically almost your weekly highs coming in for the market. Here's your weekly highs right in here. So that's your perceived. So that maybe make more sense for you to see it in an hourly chart where the market could possibly head to and break above. So that's kind of the thought process behind why 6170, 6150 is on the charts to start with. Taking advantage of just a downward play inside a long move is all this is. So using your Gann signal in this case, and Gann's one of my favorite ones, the 4th time through, you see that escalation. It works both ways, a downward lift and then an upward slant, and then you have this kind of move, and then you have a downward slant where that I talk about the triangle, completing the triangle, right? So that's you have this signal, and it's kind of completing the triangle this way. So your downward move, your ultimate goal is to see if you can get back to where it first started. And then if you can get some of this profit in the middle, that's good. And if it's got any momentum behind it, then this will end up becoming resistance on the way back up. Maybe you keep your stop a little bit above it on your last trailing contract. You're willing to take profit along the way, and your last one you try to keep, right there at that triangle mark. If since a lot of times what the market will do is it'll come down, it'll come up, it'll come test this area, maybe a little bit higher, and then it'll proceed to come on down even further. So some technical signals to keep in mind while you're trading. All right, that's going to do it for me. That's 11 minutes of me talking. Moving on to step 2. Not too hard. It's not rocket science. Just take advantage of short wins, and occasionally you'll find yourself in a nice winning position. Be willing to exit quickly, and especially in a signal that it's moving up, it's stronger on the long side than it is on the weak side. Use volume to help you out. Watch for that offsetting volume that could tell you that the market, as far as that move, is over. Offsetting volume is pretty easy to see today. If you can't see it, let me rephrase it again. When you're looking at volume, as far as your charts, you have your volume signals coming in here, where the volume is looking like, okay, it's a good shorting opportunity. And then you can see it offsetting right in here, where it covers. And then it's time to be getting the hell out of Dodge and move on. Now, if you were trailing, you definitely would make sure that you got a positive day after you saw the offsetting volume, in my humble opinion. Once you see offsetting volume, you need to see another volume figure to be able to get yourself back in. Most of the times, though, when I see offsetting volume and then it makes another high on top of that, then it becomes very difficult to take on a short signal, because the strong side of that market is the long on this side. So the market is going up and you're playing a down and an up, and that can be a losing position. So be very careful. Pick your spots, in other words, right? Pick your spots to go after a short inside a long. All right, Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. I'll see you in the next video I put together. Bye for now.